Imagine for a moment that you're driving along Interstate 280 in California on your way to San Francisco. The setting sun casts a golden glow over Silicon Valley, and you notice something unusual: a row of Tesla cars moving in perfect sync without any visible drivers. Welcome to the future that Elon Musk is trying to build. A future where Tesla is not just a car manufacturer, but a powerhouse in artificial intelligence and robotics. At a recent earnings conference that rocked Wall Street, Musk boldly declared, "Tesla is the leader in real-world AI." For many, this statement might seem like typical Musk hyperbole. After all, over 80% of Tesla's revenue still comes from selling vehicles. However, to truly understand Musk's vision, we need to look beyond the current numbers and dive into the future he is betting everything on. At the heart of this transformation is Tesla's full self-driving FSD software. Musk sees Tesla vehicles not merely as cars, but as robots on wheels, mobile computers capable of learning, adapting, and eventually operating without human intervention. It's an ambitious vision that, if realized, could redefine not only transportation, but also the very structure of our cities and economies. Imagine a world where you can summon a driverless Tesla with just a tap on your smartphone, as easily as ordering a pizza. This is the future of Robotaxis that Musk promises to deliver by 2025. It's a concept that has investors excited, with some analysts projecting that a network of Robotaxis could generate up to $1 trillion in annual revenue by 2030. But Musk's vision doesn't stop there. Step into Tesla's factory in Austin, Texas, and you can see the next chapter of this transformation taking shape. Literally. The Optimus, a humanoid robot designed to perform repetitive or dangerous tasks, is scheduled to begin pilot production by the end of 2025. Musk, never one to shy away from bold predictions, even claims that Optimus could eventually become more valuable than everything else Tesla does combined. It's easy to dismiss these forecasts as just more of Musk's hype. After all, Tesla has a history of missing deadlines, especially when it comes to autonomy. Skeptics point to the repeated delays in delivering truly unsupervised FSD, and question whether a functional robotaxi service will emerge within this decade. However, it would be unwise to underestimate Musk's determination or the resources Tesla is investing in this vision. The company boosted its AI training capacity by 400% in 2024, deploying a massive cluster of 50,000 H100 GPUs. This investment in AI infrastructure isn't just to improve existing cars, it's the foundation on which Musk plans to build an automation empire. But while Musk looks to the future, the present presents significant challenges. Tesla's electric vehicle sales fell 9% year-over-year in the first quarter of 2025, with operating profit plunging 55%. Competition from Chinese automakers like BYD is intensifying, especially in the low-cost electric vehicle segment. Curiously, despite these headwinds, Tesla's stock rose 14% after the earnings announcement. This reflects an intriguing disconnect between the company's current performance and investors' expectations. The market appears to be pricing in not what Tesla is today, but what Musk promises it will become. This duality creates a fascinating tension. On one hand, Tesla is a car manufacturer facing very real challenges: shrinking profit margins, mounting competition, and the need to launch more affordable models. On the other hand, there's Musk's vision of Tesla as an AI and robotics company that could reshape entire industries. Musk's strategic pivot to AI and robotics isn't just a marketing move. It's a calculated bet on the future of automation. He views cars as a transitional product, a stepping stone to a greater goal. As he put it, autonomous driving is Tesla's market hook for the transition to AI-based automation. This shift in focus has far-reaching implications. Tesla postponed its plans for a $25,000 electric vehicle, the so-called Model 2, to prioritize the development of Robotaxis. It's a risky move that could alienate customers seeking more affordable electric vehicles, but it aligns with Musk's long-term vision. The timing of this strategic pivot is intriguing. Musk has played an informal advisory role in the Trump administration, which could potentially ease regulations for autonomous vehicles and reduce federal incentives for electric vehicles. This could give Tesla a significant competitive advantage, accelerating its robotaxi plans, while potentially slowing the progress of traditional electric vehicle competitors. Yet this strategy is not without its critics. Analysts like Adam Jonas from Morgan Stanley openly ask, is this still a car company? For now, the answer remains yes. The vast majority of Tesla's revenue still comes from vehicle sales, and the company needs to successfully navigate the current challenges in the auto market to fund its future ambitions. The execution risks are significant. Tesla has repeatedly missed deadlines for autonomous driving, and the unsupervised FSD is still in the testing phase. UBS analysts doubt that a functional robotaxi service will emerge within this decade, citing technological and regulatory obstacles. There are also concerns about Musk's ability to focus on Tesla's core challenges, given his involvement in multiple ventures like X, SpaceX, and XAI. Despite these challenges, Musk's optimism is contagious. He envisions Tesla's market value eventually surpassing $10 trillion if its autonomy goals are achieved, a bold forecast that divides investors. While some applaud Musk's ambition, others compare Tesla's stock to a meme, driven more by hype than fundamentals. The truth likely lies somewhere in between. Tesla undeniably holds significant advantages in AI and automation, thanks to the vast amount of data collected from its fleet. Its FSD software, though not perfect, is years ahead of many competitors. And Optimus, as speculative as it may seem now, represents a daring bet on a future where robots become an integral part of everyday life. However, Tesla cannot simply abandon its automotive business. The company is planning to launch the Model Q, a $30,000 SUV, in 2025, aiming to compete directly with BYD and other Chinese rivals in the mass market for electric vehicles. This launch will be crucial for Tesla to maintain its relevance in the auto market while pursuing its ambitions in AI and robotics. Tesla's transition from a car manufacturer to a tech company is a real-time experiment, a journey full of promise and pitfalls, where success will depend not only on Musk's vision, but also on the company's ability to execute on multiple fronts simultaneously. For investors, Tesla is an enigma. With a P/E ratio of 194.16, its stock is traded based on the future potential of AI and robotics, rather than current fundamentals. This creates a volatile situation where the stock is vulnerable to significant declines if the autonomy timelines slip, or if competition in the electric vehicle market intensifies. Price projections for Tesla's shares in 2025 vary widely, from $300 to $528 per share, reflecting uncertainty over the company's ability to balance automotive performance with its AI ambitions. The optimistic scenario, with targets above $500, is closely tied to breakthroughs in autonomy technology. In the short term, analysts expect volatility as Tesla navigates declining electric vehicle sales, a 1% year-over-year drop in 2024, while ramping up its investments in AI. The successful rollout of FSD updates and the production of the Model Q will be critical to maintaining investor confidence. In the long term, Tesla's success will hinge on its ability to deliver on its promises of autonomy and robotics, while simultaneously maintaining its position in the automotive market. It's a delicate, balancing act that will require continuous innovation, flawless execution, and perhaps most importantly, the ability to navigate a rapidly evolving regulatory landscape. Musk's vision for Tesla is nothing short of revolutionary. He envisions a future where cars are just the beginning, a future where AI and robotics fundamentally transform the way we live and work. If realized, this vision could indeed turn Tesla into a $10 trillion company. Yet the road to that future is long and filled with obstacles. Tesla will have to overcome significant technological challenges, navigate a complex regulatory environment, and maintain its competitive edge in an increasingly crowded market. It will also need to manage investor expectations, balancing the promise of tomorrow with the realities of today. In the end, Tesla's success will depend not only on Musk's bold vision, but also on the company's ability to execute that vision in a way that creates real sustainable value. Whether Tesla can truly transform from a car manufacturer into a global leader in AI and robotics remains to be seen. One thing is certain, the world will be watching closely as this story unfolds. As the sun sets over Silicon Valley and the driverless Teslas continue their silent journey, one can't help but wonder, are we witnessing the birth of a new era in transportation and automation, or is this just another ambitious Silicon Valley dream? Only time will tell. But one thing is clear, with Elon Musk at the wheel, the ride is bound to be interesting.